All right, joining me is Michael Sonnenshein, president of Securitize, who is the leading tokenization platform. So they are bringing real world assets on chain. They currently have over $4 billion in tokenized securities. And of course, Michael, prior to joining Securitize, he was CEO of Grayscale Investments, where he grew that firm into the world's largest crypto asset manager. And obviously, they were instrumental in securing SEC approval for spot Bitcoin ETFs, which is something that I followed very closely. All of that was under Michael's purview, but he's now with Securitize, and he's joining me on Crypto Prime. Michael, it is so great to reconnect.
It is great to reconnect. Thank you so much for having me on. We can talk a little ETFs today if you want as well. Happy to do that. But certainly the topic du jour is tokenization and tokenization of securities.
It's funny. I've got to tell you, it seems like all the times we connected when you were at Grayscale, that feels like 15 or 20 years ago. But like time seems to move way faster in crypto than it does in TradFi.
It does. I've been working now in crypto for 12 years, and 12 years is respectable. But like in real work years, that's probably like 22 or 32 years. Yeah, it is all just transpired very, very quickly.
Well, and it's interesting because you're now sort of doing the opposite at Securitize from what you were doing at Grayscale, right? Because at Grayscale, you were essentially packaging on-chain assets into regulated investment vehicles. And now you're bringing these regulated investment vehicles and real-world assets on-chain. I'm not sure how many people in the industry can say like they've worked on both sides of this.
Well, it's been a really interesting transition and really a natural transition for me, because to that exact point, going from crypto into regulated instruments and regulated instruments into crypto, it's a lot of the same players, it's a lot of the same analogies, it's a lot of the same systems that need to speak to one another. And it really is really been, for me, coming over to Securitize, capitalizing on a lot of my experience with Grayscale, taking regulated compliant wrappers and then figuring out ways to enable investors to have better access to them. So a lot of the same kind of both undertones, but also kind of overtly what we're actually doing as a business.
Okay, so let's do this. Let's start with a brief introduction to Securitize,
Sure.
and then we can certainly get into a broader conversation around crypto and tokenization. So for people unfamiliar, explain what Securitize does.
Sure. So Securitize has been around for about 7 years. We are the leading tokenization platform in the world. Brought about $4 billion of tokenized securities on chain. Tokenization, really kind of a big topic, something a lot of people are talking about. Our focus, though, is within that on the tokenization of securities. So the assets that we service, that we touch, were ideated as securities, were born as securities, live as securities, always meant to be securities. And so Securitize has a platform, a technology stack that onboards investors. So we do KYC, AML, and ultimately investors are furnishing to us a wallet address that we can whitelist and ensure that it is a address that meets our standards. And then we have next to this technology platform the necessary licensure to be able to bring these types of investments on chain. So we have a broker dealer that allows us to sell tokenized securities. We have an SEC registered transfer agent so that as we're minting securities on chain, we always have a shadow set of books and records, who owns what, and can ensure that any kind of transfers are being done in a compliant way. And then we also have a fund administration business so that as these investments are coming on chain, we have the right team in place to be able to actively administer the funds, be it striking NAVs, monthly statements, subscriptions, redemptions, you name it. And Securitize is really proud today to work with BlackRock, Apollo, VanEck, Hamilton Lane, KKR, the world's top asset issuers. And so for a lot of them, they're already offering many, many products and many, many channels to many different types of investors. Working with us, they're bringing existing or sometimes new investments from a traditional rail onto crypto rails. And so today, Securitize is integrated with a dozen public blockchains, everything from Ethereum and Avalanche, Solana, Arbitrum, you name it, so that as investors are making investments, they're able to actually select which blockchain they want to hold their securities onto.
So you mentioned BlackRock and some of the other partnerships that you have. I think a really good example of what Securitize does can be seen in that partnership that you have with BlackRock, where Securitize tokenized a money market fund. BIDL,
Yeah.
the BlackRock US Dollar Institutional Digital Liquidity Fund. Do you want to talk about that? Because again, I just think this is a perfect example of what Securitize is doing. And I should note that fund, last I checked, was nearing $3 billion in assets in what, less than a year and a half?
Yeah, like 14, 15 months. Yeah, exactly. So I think this is a really important topic, and I'm really happy to spend time on this, Nate, because I think that there is this misconception in the community that just because you put something on chain inherently makes it liquid. And you're a gentleman who follows ETFs and liquidity and flows. You know that that's not the case, right? Liquidity depends on buyers and sellers and market depth, and so just by solely putting something into an on-chain environment doesn't inherently make it liquid. And so when we think about tokenizing securities, bringing something into an on-chain environment, it has to be done for the right reasons. We want to be unlocking new features, new attributes for the asset issuers to be able to offer something to their investors that they may not be able to in a regular or traditional environment. And to the end user, we want to be unlocking some other kind of utility or some other way that accessing the investment through this format versus the traditional format is an overall better experience, a better return profile, you name it. So when you think about a money market fund or just tokenizing treasuries, short dated, fixed income instruments, there's lots of money market funds out there, right? And we all thankfully have access to them, can buy them in a brokerage account, retirement account, et cetera. When you bring them on chain, though, all kinds of new things are possible. And that's the case for BIDL. So a traditional money market fund, usually you need to buy it by around, let's call it 2 p.m. Eastern most days, or else you kind of miss the order cutoff time. With BIDL, which is just an on-chain treasury fund, like 3 months and less, you can buy it 24/7, right? You can buy it, anytime you want. And you can also redeem out of it anytime you want. There's liquidity that's there so that if investors do need liquidity and need to get back to a stable asset or dollars, they can always do so. So already you're starting to see the differentiation between those traditional rail investments and crypto investments. In a traditional money market fund, usually get your dividends paid out to you, your interest payments, sometimes monthly, often cases could be quarterly. In the case of a product like BIDL, we actually are able to pay out the dividends to investors on a daily basis. That's huge. That's huge, not just for the access to capital, but think about the compounding effect of getting that dividend payment on a daily basis rather than having to wait for it to build up and get paid to you monthly or quarterly before you can start compounding those interest payments. And so it's those types of features that are kind of, they're out of the bottle now, right? And it's hard to put them back inside. And so that's why you're seeing all the top tier asset issuers like BlackRock, like Apollo, et cetera, coming to these on-chain environments to be able to offer features that our traditional systems just are not set up for at the moment. And that's why, to your point, products like BIDL have seen billions of dollars of inflows in just a little bit over a year.
You mentioned Apollo. I feel like that's another excellent example of the work Securitize is doing. You have the Apollo Diversified Credit Fund. Do you want to offer a quick snapshot on that one as well? And maybe you can talk specifically about why tokenization can be beneficial in private credit as well.
Yeah, so the product we did with Apollo is the diversified credit fund. And so for some investors in an on-chain environment looking for a high quality asset issuer, high quality underlying investment, and looking for cash flow, call it 8-9%, the Apollo diversified credit fund has been a really good option for them. For Apollo, what's been so interesting is that the diversified credit fund has actually really enabled a lot of more investors not only to access the investment itself, but then they've actually been able to link that investment with the world of DeFi. So when you think about buying a private fund in a traditional format, yeah, maybe your bank or investment broker may give you some loan to value, some relief against that. But when it comes to the on-chain environment, there's such a better way to integrate with the world of DeFi, where you're actually seeing investors buy into these funds, be able to actively borrow against it in stable coins because of the connectivity they have to the DeFi ecosystem, and then able to either use that leverage to buy more of the fund or undertake other investment activities. And so, we're not going to be, here telling you, Nate, that today it's easier to buy investments on chain than it is to buy them traditionally. In fact, that's not the case. It's probably still the case. It's still easier to buy those investments through traditional formats. But as the crypto ecosystem gets larger, as more wealth is created inside crypto wallets, there is more value that is looking for stable homes, income generation in an on-chain, on-rails environment, well before that value is looking to be moved back onto traditional rails, looking to be back moved into bank accounts or brokerage accounts, et cetera. And so that's why we're seeing this type of demand for investors to be able to diversify their holdings from their wallets and move into these types of instruments.
In talking about both the BlackRock fund and the Apollo fund, I feel like you've done a good job of highlighting some of the benefits of tokenization. But I want to take a step back here and reset a little bit and have you articulate the benefits of tokenization at a higher level. And I think you'll like this. I'm going to frame this in the context of ETFs. You said we could talk ETFs at the top. So I'm going to frame this in the context of ETFs. Obviously, we're both very familiar with that world. And you know the benefits of the ETF wrapper inside and out. And so I'm sure you've seen some of this, but there are, I would say, a lot of people in TradFi who are very skeptical that tokenization can improve on the ETF wrapper because ETFs are already very low cost. They're liquid, they're efficient, just in terms of offering exposure to pretty much everything. They're regulated. And so I'd love to have you talk more about what tokenization can bring to the table that maybe ETFs aren't already providing. And to what you were saying earlier, clearly we're still in the early days here, but I'm thinking out on the future. If we look kind of down, 5, 10, 15 years out, what are the benefits here?
Yeah, so I think there's a pretty long list. So let me think about what some of the most important attributes are. So first is probably distribution. So for an asset issuer, there's a whole universe of asset buyers that are looking for product, that are looking for it not through traditional channels. And so as an asset issuer, if this is tokenized investments and being able to distribute investments across new rails into new users, to any asset issuer, raising AUM, having more access to capital is always the name of the game. So there's definitely a distribution play by bringing assets on chain and offering them to a wider audience. Two, I think it's probably, the frictions of subscription and redemption, not just for ETFs, but pretty much every investment. The ability to buy an investment on chain and have it settle atomically, where you can literally send stable coins or whatever it may be to a wallet address and have immediately return your investment. It's not even T0, it's T instantaneous, right? And so when you think about that as an asset issuer and as an investor, the ability to start earning that return stream, the ability to perhaps get dividends paid out to you intraday or kind of calculated down to the minute or even second, just unlocks a whole new world of use cases for today. A lot of investments which either have long settlement times or disparate settlement times, or trades break, or you're not really kind of making the best use of capital allocation, capital decisions. There's a lot of talk about fractionalization using tokenization, meaning that because when you have an investment on chain, you're able to create tokens that are divisible to a greater number of decimal places, that you can actually start to experiment with new types of investment models that account for smaller amounts of ownership. And let's talk about timing, right? In the tokenized world, things move 24/7, 365. Things like ETFs and certainly things like equities are only open and only trade during stock market hours. And sure, there's no doubt from a trend perspective, we're moving towards extended hours, and perhaps that continues to grow and expand over time. But when you look at a lot of the access products within the ETF ecosystem, particularly even Bitcoin ETFs, they have these massive movements on Monday mornings, right? Because of whatever it is that transpired in the underlying commodity over the weekend or in outside of traditional trading hours. And so for a lot of folks, the ability to trade through tokenized format 24/7, 365 because of market movements, because of geopolitical events, or whatever may be driving valuations, there's just no question that in this connected world, you're seeing that convergence between these types of influences and their asset price, movements that go alongside them.
I don't know if you saw this. I'm sure you did, but Rick Edelman recently said that ETFs as we know them today really won't exist in 5 years. And he said they'll be replaced by tokenized versions of themselves. And of course, for people unfamiliar, Rick founded what is now a $300 billion RIA in Edelman Financial Engines. And so for me, I think that's an enormous statement coming from somebody like him who resided in the TradFi world for so long, and he was very prominent. And now he's saying that ETFs as we know them today won't exist in 5 years. What did you think about Rick's comments on tokenized ETFs? I mean, do you agree that's the direction of travel? What do you think about time frame?
It's funny you bring that up because I actually caught up with Rick the other day. I've known Rick a long time, as you might imagine, and we were talking about this very topic. My belief is that the same way that we've seen the ETF wrapper, because of all the great things about the ETF wrapper, have really eaten away at the mutual fund industry, right? Every day, another mutual fund dies, another ETF is born, right? And we're kind of continuing to see that trend. The ETF space still has some room to go, right? We could definitely still continue to see more ETFs continue to launch over the next 5+ years. But ultimately, something will have to come along and leapfrog the ETF wrapper, the same way the ETF wrapper was a real improvement upon the mutual fund wrapper. And I do think, in fact, some version of a tokenized investment will allow, either because of the precision of the investment, the 24/7 tradability of the investment, the distribution of the investment, the atomic settlement, whatever it may be, the tokenization of the exposures that ETF offer will, in fact, I think, ultimately be the nail in the coffin in the ETF wrapper. But these are things that take time, right? Nate, you've been watching capital markets. How long did it take us to go from T+3 to T+2, right? These are seismic shifts in the market that affect so many different constituents. So it's hard to put a time and a date on it. But there's no question from a trend perspective, the features, the attributes that we're able to demonstrate, even in just these early days of tokenization of securities, for sure, to me, portends very well for the future on its impact on ETFs.
Well, let me ask you this, just to your last point there. What are some of the intermediary steps needed to get to a fully tokenized ETF future? Like, what should we expect in terms of progress over the next several years, or what are some of the checkpoints or milestones? What needs to happen here?
Well, there's a big rush at the moment around tokenized equities, right? We all can certainly think about what I shared with you earlier around tokenized treasuries or tokenized private credit, but these are for the most part tokenized funds. And so we actually at Securitize tokenized the first publicly traded equity. It's a New York Stock Exchange listed company called Exodus that happens to be a crypto wallet. So you can actually take shares of Exodus from your brokerage account, put them back to the transfer agent, and take back receipt of your shares in tokenized format in your wallet. That is a huge milestone, right? To be able to see you holding a regulated New York Stock Exchange listed security in your wallet right alongside the other assets you own is pretty remarkable. And so what you're seeing now is a lot of work being done underway to kind of merge these two worlds, right? You have the world of what's available in your brokerage account, stocks, ETFs, fixed income, and what's available in your wallet, which has mostly and historically to date been speculative commodities, right? Bitcoin, Ethereum, and now you're starting to see the beginnings of tokenized securities investment. And so ultimately, I see these two worlds converging, and we're going to see I think, massive upgrades in the user interface so that users that are trading securities through a wallet as opposed to through a brokerage account are going to experience that same frictionless ability to buy and sell the way that they do today when they're in a E-Trade account or a Schwab account. It's going to be very, very simple. Two, I think we need to get to a place where the on-chain investments are going to be composable. So one of the things that we're certainly monitoring today is this concept that unfortunately is getting a little attention at the moment, which is this idea of wrapped securities. So in different ecosystems, there may be a tokenized or wrapped version of Tesla and another tokenized or wrapped version of Tesla in another ecosystem. And those are not two securities that are going to be composable. And so I think we need to get harmoniously onto like a singular standard, much the same way that whether you're trading Tesla at Schwab or Tesla at E-Trade, you're still, trading the same Tesla, and those two trades can be settled amongst one another. And I think the SEC has done a great job paying attention to this. Recently, Commissioner Peirce put out some guidance around this very topic, which is that if you are going to put assets on chain, let's not run afoul of securities laws. Let's stay within regulated environments. Let's ensure that there's an even playing field around these types of assets. And ultimately, that will, I think, allow us to accelerate the adoption and use case of these assets in tokenized format. So those are kind of some of the bigger pieces. The actual infrastructure, the actual plumbing, it's there, right? From a regulation perspective, regulators aren't there to say your stocks have to settle on DTC versus your stocks have to settle on Ethereum or Solana. They're just there to make sure that investors are protected and the right safeguards are in place. So technologically, I think we're very well set up. It's really just a matter of upgrading kind of the user interfaces, changing behaviors amongst folks. Those will be the drivers of how the system really does upgrade.
To your point on the SEC, it's amazing. I'm sure you saw this as well, but last Friday, SEC Chair Paul Atkins basically said anything that can be tokenized will be tokenized. And clearly, they're much more supportive of the innovation that's occurring here. I assume just in general, you like what you're seeing out of regulators. And of course, we had the Genius Act signed into law last week. So just on the crypto regulatory front, I'm assuming you like what you see.
We do. What I would say is that, at Securitize, because our DNA and very much our MO of how we operate today is always and continues to be within compliant frameworks. We're selling securities through a broker dealer. We're keeping track of who owns what through a regulated transfer agent. For us, the regulation hasn't really been like an unlock because this is always what we've actually been doing. From a posturing perspective, how are our regulators looking at this space, engaging with this space has been absolutely welcome, particularly compared to previous administrations. So that absolutely. But I would say that, to Chair Atkins' commentary, just because something can be tokenized doesn't necessarily mean that it needs to or should be tokenized, right? And so again, it comes back to my earlier comment about liquidity and things of that nature. The things today that are being tokenized are things that are high quality, cash flowing, very, very liquid. Over time, as there's a greater user base of investors that are trading in an on-chain environment, perhaps that gives rise to more illiquid assets ultimately finding liquidity in an on-chain environment. But today, just simply, if you take a illiquid asset and put it on chain, doesn't necessarily mean that that's going to be like a liquidity unlock for whatever that asset may be.
Just a few minutes left here, and I'll warn you, be careful here. I don't want you to get yourself in trouble because my experience with the various crypto factions out there, they can be very passionate. But sure. I am curious whether you think certain chains are better positioned for this future wave of tokenization. Like, how do you see the competitive landscape playing out here with Ethereum and Solana, et cetera?
Yeah, I'm going to be real careful with my word choice here. So I appreciate you looking out for an old friend, Nate. So at Securitize, we are blockchain agnostic, right? I said we're integrated with 12 public blockchains today. I think it's too early to say is really like the punchline. I don't want to bury the lead here. I think it's too early to say. There is a lot of, and you've seen a tremendous amount of the tokenized security world reside on EVM chains like Ethereum and Arbitrum and places like that. You've seen more recent pushes from communities like Solana that are also trying to gain market share. Ultimately, though, we are moving towards and have been building towards a world of interoperability. And so at Securitize, we work with Wormhole so that investors can bridge their assets across chain. And there's still room to go. Just because these are the chains that exist today don't necessarily mean that these will be the chains that these assets reside on in the future or that find their best product market fit. One of the projects we're working on at Securitize is actually a new chain that will be built off of Arbitrum called Converge. And that's a project that we're doing with the team at Athena. So we really think that there is a home for a lot of these real world assets, tokenized securities, to have institutional grade DeFi interoperability. And that's really why we're building the Converge blockchain. So there's going to be assets that continue to be minted on Ethereum, Solana, Converge, you name it. But it is way too early to call a winner. And ultimately, I think it's been nothing but exciting to see all of the excitement from each of these communities, to see the TVL continue to rise on their respective ecosystems and see more and more participants from these ecosystems wanting to action, wanting to put value into tokenized investments on each of these respective chains.
I think you did an absolutely fantastic job of answering that without ruffling any feathers.
Okay, we'll see. We'll see when this comes out.
That's right. And the other, I think, key takeaway for me just in our conversation today is just because something can be tokenized doesn't mean it should, which I think is an excellent point. But Michael, again, so great to reconnect. I always enjoyed our interactions when you were at Grayscale. It's great to see you over at Securitize now. I love the work Securitize is doing. I think it's going to be so much fun just watching this entire space over the next several years. But thank you for joining me.
Thanks for having me on. And we'll have to continue to come back on and chat as the space continues to mature. So appreciate the time as well.
Thank you. That was Michael Sonnenshein, president of Securitize. Thank you for listening to or watching Crypto Prime. As always, you can stay up to date on all of my latest guests by visiting CryptoPrimePodcast.com. See you again next week.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of the investment advisory firm The ETF Store. While OTR Media LLC and the ETF Store are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by the ETF Store. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the potential loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.